you go to the club and you're desperate, you're going to get desperate results, okay? Every single one of you guys out there should be holding some cash. And I'm going to kind of get into what as a percent of your portfolio you should hold in cash at all times, and then kind of why you should be holding some cash right now. Now, by the way, if you're misunderstanding why I'm saying cash, it doesn't mean you necessarily need to be holding physical cash. What this basically means is it means money that you can easily invest in your accounts, liquid money, maybe money that's in a savings account, checking account, maybe it's in actual physical cash, whatever, that you can funnel into your portfolio. Maybe it's just money that you hold in your brokerage account. If you have an account at Fidelity or TD Ameritrade or Robinhood or whatever, maybe it's just money you kind of hold in there. So the way I kind of think about things is obviously you got like an emergency account. Everybody should have an emergency account. This account has nothing to do with investing. This account is money that's pretty much untouchable unless it's literally an emergency, and you should always have like at least 1 month of your expenses, okay? So at least 1 month, if not multiple months, and this is untouchable money that's only for emergency situations. But then you should have a good sum of money that is basically in, checking accounts or savings accounts and things like that, that this money, or in your brokerage account, that this money is just ready to go and ready to invest whenever you see an opportunity, whenever you want to invest, that money is there, okay? And then you actually have your brokerage account money, which is all in your brokerage account and should be invested, okay? So that's kind of the way I like to think about things. Now, I used to be 100% invested at all times, okay? I used to be 100% invested at all times. I would have basically almost no money on the sidelines at all. All I would have is my little emergency money that if an emergency happened, I lost my job or something, like I had some emergency money, everything was always invested. And then basically when I get some new money coming in, I would put that in the account immediately, and I would just be nearly 100% invested at all times. That was several years ago. I do not do that anymore. I do not do that anymore, and I'll explain why. Also, you could be 0% invested, meaning you have no money in the market at all, and you definitely don't want to be like that. I mean, there's so many people I've come across over the last 10 years of me being invested, right, that literally have nothing invested, and they see the markets going up, and they see this stock and that stock, and real estate prices going up, and they've watched this for years and years, and they've never participated. They've always had nothing invested, and they've missed out on ridiculous amounts of gains. You could have pretty much been in any stock you imaginable in 2009, 2010, and held it to today and been up massively, guys, absolutely massively. So you don't want to be up 100% invested. You don't want to be 0%. So where do you want to fall in the spectrum of how much you want invested, and then why do you need to always have some money basically that I call sideline money? It's sideline money. Well, my opinion on this is you should always hold between 10 and around 30% of your total portfolio in cash, in my opinion. In cash, basically meaning just money that's on the sideline, just waiting for an opportunity to invest, okay? 10 to 30%. 10% is if you're really, there's just a lot of deals out there right now. There are a lot of deals and you're trying to take advantage of those deals. Maybe you get down to a point where you only have about 10% of your money in cash, okay? That's fine. That's like if you just see deal after deal and stock after stock and you're just ready to invest. That's fine. And then up to 30% is if you're really not seeing any good deals out there. If you're just looking at stocks and you're coming across company after company and you're like, this one's overvalued, this one's overvalued, I can't find any undervalued companies. You can build it up. You never want to be desperate to make an investment, okay? You never want to be desperate to make an investment. When you are desperate to make an investment, it's like, I don't know, you're trying to get laid and you go to the club. If you go to the club and you're desperate, you're going to get desperate results, okay? They're not going to be good results at all, okay? That is the exact same thing in the stock market. You go into the stock market and you're desperate to just try to invest money in whatever, you're going to get some desperate results, guys, and it is not going to be a good situation for you. You do not want to do that, okay? Now, why do you want to always hold money in cash? Why do you want to always have some sideline money going on? The real reason you always want to have some sideline money is because there's going to be a lot of volatility, okay? And less than a month ago, it was what? The second week of February. February, the markets were tanking, okay? The markets were tanking. It was, crash city. MU stock, MU, which is one, a lot of you guys hold right now, those shares were at $39. Now, about a month later, those shares are around, I think around $54. I could go through stock after stock that it was either the first or second week of February, the markets were tanking across the board and stocks were insanely cheap, okay? Just everything was falling. Think about if you were in a position where you could be buying stocks during that week when everything was just, crashing for whatever reason they were fabricated out there and thrown out there. You would be up massively already on the majority of positions out there, okay? Cruise shares were trading around 37. Now they're around, 43, 44. Eli, another one of my holdings, was around 14. Now that's 16 something a share. Pretty much stock after stock we could go through and say, wow, that one was trading way down. But if you were 100% invested at that time, you had nothing to buy for with this $39 drop here or any of the other stocks you would have wanted to buy. If you're 100% invested, you're like chained up. You're chained up. You got nothing to do. You just have to watch those markets dip, all your stocks go down, and then that's just a horrible feeling. That is a horrible feeling, guys. You don't want to be in that position. You never want to be in the position where you're just holding and you got nothing to buy for and you're seeing all these cheap prices on stock after stock after stock because of whatever little worry came out at that time, which there will continue to be so much stuff that really has no real world implications. I've seen it for a decade now, guys, where there's just a lot of little mumbo jumbo out there. Oh, there's this happened. Oh, this person resigned from the White House. All this irrelevant stuff. It's really irrelevant stuff in terms of what it's going to mean for actual real corporations as far as their profits go and things like that. When there's something real that happens, when there's something real with the GDP numbers that go south, when the unemployment goes really, really weak, things like that, that's when you need to worry, okay? And that's when you really need to be cash heavy and ready to, take advantage of put options, take advantage of buying shares in the dips, the huge dips that is, and things like that. That's when you really need to be, ready to invest at those particular times. But all these little mumbo jumbo things, it happens all the time. 2017 happened to be a very even keel year. That is rare. Almost every single year I've ever been in the market, several times during the course of that year, there was some type of worry. Oh my gosh, we're going to have a double dip recession. Oh my gosh, China might get weak. Oh my gosh, so-and-so might get elected. So-and-so might not get elected. Whatever it was, there's always a million reasons, and stocks will just dip and dip for whatever reason, and you get these great opportunities to buy great corporations at a much cheaper price than you would have any other time. And the question is, are you going to ever be in a position where you can take advantage of that? If you're 100% invested all the time, you're never ever in a position where when stocks dip, and they will dip from time to time, you can take advantage of that. But at the same time, you don't ever want to be to a point where you're 0% invested, because then you're just missing out on all the gains, obviously. You never want to be 0% invested unless somehow you time the market perfectly when you're like, oh my gosh, we're going to have something happen in the market. I'm going to sell off everything right now, and then we're going to go down, and then I'm going to buy back. Like, that's pretty unrealistic, guys. Always be in a position where you are ready to buy when you see opportunities. Don't ever get desperate to be like, I need to invest all my money. It's just not the smartest way, in my opinion. As someone that used to do that back in the day, I used to always invest every dime I had. And that was just what I did. And that's really not the way, because then you don't have money ready for all of these huge dips and opportunities you have out there, guys. Individual stocks drop all the time, sometimes for reasons that you don't agree with, okay? Sometimes, they report earnings and the earnings were actually pretty good, but, the analyst didn't like it or whatever, or Wall Street didn't like it, and that stock drops huge. Well, that is a huge opportunity for you to buy shares if you really love that company so much, right? But if you had already been fully invested in that stock, what do you have to do? You just have to hold those shares, watch them go to a much lower cost than what you paid for those shares, and then you got nothing to stick in them, even though you really love that company. That is not a position you want to be in, guys. So make sure you're always trying to keep, somewhere between 10 to 30%, depending on your financial situation and depending on, how much you love stocks at that particular time. If you really just think there are so many deals, then you can get down to this point. But man, don't be desperate. If you don't see a lot of deals, hold a lot of cash, man. Hold a lot of cash, because I can almost guarantee you there's going to be opportunities out there. There's going to be dips. There's going to be dips in particular stocks you were looking into. There's going to be dips in the market in general, and that's when you can really make a lot of money and get your cost basis is way lower than you could have maybe a few weeks ago or a few months ago, guys. So that is why I personally, adapt this way. I generally always have 10% to 30% of my portfolio. Right now, I probably have somewhere around, I would say between 15 and 20% of my portfolio total is in cash right now, somewhere around 15 to 20%. And it will probably continue to be somewhere around there, but that's just me, and that's just kind of the way I'm approaching things right now. If I see more good deals out there, I might drop it to somewhere around a 10% rate. If, the stocks just go up like crazy over the next, let's say 6 months or whatever, I might get to a place where 30% of my portfolio is in cash. We shall just see, guys. But right now, I'm about 15 to 20%. So anyways, hope you guys enjoyed this. Hope you learned a lot from it. And anyways, thank you for watching, guys, and have a great day.